You raise capital, it's dollar denominated. You allocate a portion to buy Bitcoin, which will pay back the principal. And then you invest, for El Salvador it was half, into a revenue generating activity like mining Bitcoin or building new energy infra, also mine Bitcoin, which will pay the coupon off.
Samson Mow starts with a blunt observation. Most national currencies are inefficient and unsustainable. He points out that in the past, when a currency collapsed through hyperinflation, countries could simply reboot, create a new one, reset their system, and move on. But that era is over. Why? Because today, alternatives already exist. People no longer have to accept a failing national currency. Between Bitcoin and stablecoins, individuals now have digital lifeboats. If a government's money inflates into oblivion, citizens can escape, instantly, digitally, and globally.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I just know there's a lot of inefficiencies with fiat currencies, and we're going to see a lot more drop away. And you had in the past, reboots of currencies, and I don't think that's possible today. Like if your currency is hyperinflating, you can't make a new one. With Bitcoin and stablecoins, you just cannot sell it, right? The alternative exists now.
So I think you're going to see fewer and fewer fiat currencies. Sure, we'll just roll under the dollar. Yeah, they'll dollarize. Yeah, and eventually, to be determined, it either coexists or it doesn't coexist.
I think it has to do with the evolution of technology, right? Like when the Constitution was written and the amendments were passed, you didn't have central banks and government money predominant in the world.
But Jefferson was warning us about that.
Yes. But, when money is centralized and largely digital and very controllable, then a lot of those rights are no longer guaranteed, because if you have no ability to have your own money, like let's say the right to bear money, then can you have free speech, right? Can you actually, pay for your internet bill to post something? Can you bear arms if you cannot buy arms? Or if they have a social credit score and they go, yeah, you can't have this now, right?
So that you can't pay to drive to the assembly, right? Yeah. It all hinges on payments.
Yeah. But it was kind of assumed that money would be bearer until suddenly it wasn't. And I think Bitcoin fixes a lot of this. And I think perhaps it was Trump's experience, being attacked by the other side that made him understand maybe a bearer asset is good. And you do see him piling into Bitcoin. Unfortunately, a bit too much in the crypto side, but nobody's perfect. But definitely it's on the right track that he is for bearer instruments. And I think this is kind of the way to fix that. But it's kind of sad that you have to pass laws for the right to having self-custody or other things like that, when it should be a given that you should be able to have money as a sovereign individual. Well, I think there is a place for it. And the world definitely is changing to embrace, real world asset tokenization more so. But at the same time, the TradFi world is evolving too. So I think soon you'll have 24/7 trading of equities. And then the question really is, what is the benefit of tokenization? And I see a really interesting path from there, because it's always a competition, right? The origin of stocks were bearer. You have a piece of paper and that's your stock in the company. I think real world assets could be very interesting if they're tokenized in a way that they can be bearer, because then you can have distributed ownership. But the question again is, does the system as a whole want that?
Well, it made it illegal, so I would guess no.
Well, yeah, so we'll to see, but going to that kind of a world is very interesting, not just the 24/7 trading, because I think the old system will evolve in that way, but having a real benefit, which is something is bearer, and being able to be okay with that. But like you said, it's not something that the system wants. But what Saylor's point was more so like, I think it's okay now to tokenize things, and the critiques on his talk were more about why are you talking about all these other crypto projects and why you can tokenize on those crypto projects, right? And also he mentioned Katy Perry a bunch of times, and it was funny because people were messaging me and saying, what was that about? Like, what was he going on about? And I was backstage, so I didn't really hear what he was saying. There is some value, I would say. So there is value in tokenization if it is a bearer asset, right? Maybe equities, no, but definitely a membership token is. And is it really bearer? Is it transferable? Can you give your Katy Perry fan club membership to me, right? And this is something that most entities don't want. They don't want that fluidity and liquidity. They want to lock you in. So if someone did want to do that and is fully transferable, then and they honor that transfer, then that is better than the old system where you cannot have that liquidity or transferability.
Yeah.
So maybe he's right in that sense. But then usually when things are tokenized or tradable, someone wants to regulate that too. But if you can avoid that and it is free flowing, then yes, you can have your fund and tokenize anything. There is a danger, of course, of people scamming, but that's always been a danger, right?
And we have laws against fraud.
Yes, but you open up a bigger can of worms because now anyone can make any fan club, and how do you know that that's the real Katy Perry fan club?
Well, if you listen carefully, he's basically implying that all the other crypto projects, blockchain projects, or corporations that, well, actually, he said it. He said they set up a Swiss foundation and they're pretending to be decentralized. And now that...
Would you agree with that?
It's true. I mean, they are corporations, right? That were pretending to be decentralized. And you can argue, was it ethical or not ethical? Because at the time, the regulations were that, if you're a security, you should register, right? Yeah. At the time, the laws were very clear. Ethereum was very obviously a security if you go back and listen to their pitch to investors. But of course, they're kind of grandfathered in, and now it's a free-for-all. Everyone, like Tron is a company now, right? So it just changes with the time. But the danger is the pendulum swings the other way. And I've heard a few people here in DC kind of mention the same thing. Like, if you swing it so far here and everything is good and you're able to do anything and, Tron is listed, then what happens when the Democrats come back into power and they seek to, punish some people that may have gained from that, and the pendulum goes hard the other way. So I think there has to be some balance.
Yeah.
Basically, the Bitcoin bond is what Strategy and Sailor are doing, but with sovereign debt instead of, corporate debt or preferred shares. It's the exact same thing. You raise capital, it's dollar denominated, you allocate a portion to buy Bitcoin, which will pay back the principal, and then you invest, for El Salvador, it was half, into a revenue generating activity like mining Bitcoin or building new energy infra to also mine Bitcoin, which will pay the coupon off. So it's basically a way to buy Bitcoin for countries that have no good way to buy Bitcoin or are more impoverished. But for El Salvador, it's tricky because you have to kind of figure out how to allocate the existing energy that they had. Because to build a new geothermal plant takes 10 years, maybe 5 years, maybe 10 years. But you can kind of like move stuff around, shift things around, and squeeze out some energy to mine. But for Paraguay, they have a massive amount of excess right now. So they could raise and start mining tomorrow.
Throughout the discussion, one theme echoes again and again. Bitcoin restores individual sovereignty. Mow envisions a future where fiat currencies either collapse or consolidate under stronger ones, where individuals hold digital bearer money instead of trusting centralized intermediaries, and where nations leverage Bitcoin to escape financial dependence. From governments to unbanked citizens, the message is clear. Bitcoin is the great equalizer. It allows countries to issue debt on their own terms. It gives individuals the power to store value outside of political control.
Well, when you're pitching to governments, you should actually try to be as conservative as possible.
Sure.
Even for me, I think 60% annual growth is conservative.
Yeah. So then they pay off the bond and they get all the infrastructure and the mine Bitcoin from that. And the revenue was generated.
But also, I structured it in a way where you recoup the principal after 5 years. And then, let's say Bitcoin tripled, then you have more Bitcoin left over, right? Sure. Then you share that Bitcoin upside with the investors.
Yeah.
But there are many permutations here. The key is that investors have some extra exposure to Bitcoin, not just the base coupon, right? And it ideally scales with Bitcoin's,
astronomical growth.
Yeah, yeah. I mean, as opposed to a traditional bond right now today, I just have to get money back.
Yeah.
But I didn't make any more money to pay off the money. So.
But if you look at it, like a lot of Latin American countries are in debt to IMF or whoever. And this is really the only way for them to get out of debt. We prepared a deck for Argentina, and it's like, making its way up the food chain. But we did some projections, and we think if they did a sort of a DCA bond doing $1 billion a year, they could probably pay off their debt, I think $100+ billion of debt in 30 years. If they did a lump sum bond issuance of, 30 billion in bonds in 1 year, this year, they will pay it off in 10 years. They will be debt-free in 10 years.
Wow.
So that's going to Millet.
Yeah, and it looks like Trump and Bessent, the U.S. wants to open up those swap lines to Argentina, so they're going to have some money in there. Maybe Trump's pro-Bitcoin stance could get down there a little bit. Maybe we'll go for that.
Argentina's also energy rich too, so they could, outside of that program, they can do Bitcoin mining.
Yeah. Okay. Now you're talking about South American countries.
Yeah.
El Salvador, Argentina, Paraguay, etc. Another thing that you're trying to tackle is unbanked people.
Yes.
Per the IMF, it's a couple of years where I thought it was like 1 billion or 1.5 billion people, adults actually, not people, adults in the world that weren't banked. You say maybe the number's higher. I'm guessing a lot of that's probably in South America. I'm guessing that's coming from, number one, most people don't have permission to join. They don't have the right documents. We're in a sanctioned country. Or they're so poor they can't afford a bank account.
Well, the thing is, banks don't want customers. It's too risky for them now to have customers, right? That's why...
It's kind of weird to say.
It's true. Like, it's harder today to get a bank account than ever before because of all the regulatory requirements, right? Compliance teams are growing in size, and it's risky. Like, unless you're putting a lot of money at the bank, you're a cost center to them. You're not a revenue generating, lender to the bank at that point. So there is no encouragement to bank the unbanked. And this is why I think stablecoins are becoming so prevalent, because they're the last mile. If you look at Tether, in Latin America, people just call it digital dollar. They don't know it's Tether. They don't know who Paulo is. It's just a digital dollar that they can get on their phone. And that's good enough for them, because for them, that's their Bitcoin. That's the thing that protects them against the inflation of the peso or whatever bolivar or the currency that they have. And we just have to get them to understand that, Bitcoin is better than that. So it's a process, I think. I would say we're approaching the USDT users in LATAM. There's 400, maybe 450 now, million users of USDT. Unfortunately, a lot of them are using altcoin wallets. But I think we are the first Bitcoin wallet that has stablecoin support. So in Aqua, you can receive stablecoins from other chains. It'll swap it to Liquid Tether. That's the base of Aqua. It's a liquid wallet. And then from there, you can swap it to Liquid Bitcoin, send it out over Lightning, or swap it to Bitcoin main chain and put it in cold storage. So that's kind of how we plan to onboard them. Do local integrations, integrate with local payment providers where they can send PIX to their Aqua wallet and get the PIX stablecoin, DPIX.
Okay, what's that?
It's the stablecoin of the Brazilian currency. Yeah, the Brazilian digital bank currency. It's called PIX.
Okay.
But there are a lot of these systems in place in Latin America. You just have to build the right wallet that integrates all the on and off ramps and connects it to Bitcoin.
Yeah.
And that's what Aqua is.
So what markets are you in so far?
We have a lot of users all over the world, but Brazil and Argentina are two of our bigger ones.
We're watching the end of the fiat era and the rise of monetary sovereignty through Bitcoin. Inefficient currencies will fade. Centralized systems will struggle to maintain control. And in their place, Bitcoin and Bitcoin-based financial tools like stablecoins, bonds, and tokenized real assets will define the next century of global finance. For individuals, it means learning to self-custody, to understand digital bearer assets, and to embrace tools like Aqua that make this freedom practical. For nations, it means leveraging Bitcoin not just as an investment, but as a foundation for financial independence.